I strongly believe that data gives us an edge in the market. If we know more than most people, we tend to be better at picking bottoms and picking tops. Now, what's also useful with data is that we can actually find long-term strategies that tend to work well. For example, there's the saying that Bitcoin is a system that moves money from the impatient people to the patient people. But it's interesting how strong that effect actually is. Have a look at this chart here. This shows us the coin days in profit and in loss. When it's in dark blue, that means profit. When it's in light blue, that means loss. Now, this is a chart of long-term holders. And what on earth are coin days? When you own one Bitcoin and you hold it over 100 days, then you have accumulated 100 coin days. Now, if you then move the Bitcoin, then you've destroyed those coin days and you start again at 1. So by looking at how many coin days are currently in profit versus in loss, we can see what's happening to the long-term holders. How many long-term holders tend to not be in profit? And again, this chart shows us that even during a massive bear market, right? When Bitcoin, for example, went from above $1,000 to below $200, that still then most coin days of the long-term holders are in profit. Yes, of course, some are in losses, but the majority still stays in profit. In other words, this 80% bear market isn't really that much of a deal if you bought beforehand, of course. So if you simply just hold for long enough. And it seems like the degree to how much the long-term holders get in losses, to how much those coin days are not in profit, is quite stable over time. And right now, of course, we are close to the all-time high, so there isn't much loss. But still, if you're only holding for long enough, you should be in profit. And if you're holding for more than one cycle, so more than 4 to 5 years, you should be, in general, making money. And so we can see, on the other hand, how the short-term holder movements are much more erratic. This shows the coin days destroyed over the last 90 days for the short-term holders. Now, this is still an interesting metric, but have a look at how much this is fluctuating. A lot of short-term holder coin days destroyed during the COVID crash. A lot of short-term holder coin days destroyed when Bitcoin was at around 40K. Very few coin days destroyed when we went sideways for a few months. And it appears as if the short-term holders aren't necessarily buying when it's a good opportunity always to buy. They tend to be panic selling at the bottoms. Now, the long-term holder 90-day coin days destroyed looks a bit more useful, right? It looks like the long-term holders tend to sell into a rally. So when Bitcoin price goes up, then the long-term holders tend to offload Bitcoin. So that happened in 2017. It also happened in 2021. And when the long-term holders are not destroying their Bitcoin, when they're just accumulating, for example, that's when this is low. So we should be buying at those points in time. We want to buy when the long-term holder 90-day coin days destroyed is low, and we should be selling when it's high. Currently, unfortunately, it's rather high than low. Now, instead of taking the last 90 days, we can have a look at the entire blockchain history, and we can make a few adjustments in terms of the circulating supply of Bitcoin, and then get a coin days destroyed multiple indicator from that. And this is one of my favorite indicators. This is how I timed selling some of my Bitcoin at 73K to then afterwards buy it back in at below 60K again. So when the value days destroyed multiple is in red, we want to be selling. When it's in green, we want to consider buying. Currently, we aren't super red, we aren't super green. The tendency is that this is coming further down, meaning that the market is cooling off. Now, here's the realized value to transaction ratio. So again, when we're moving our Bitcoin, we are realizing the value at the current price, and transactions is simply just the number of transactions that get performed at the time. It tends to be positively correlated to the price, but unfortunately, the range is not very constant, as in the peaks are going down over time. So there's an adjustment. This is the coin time realized value transaction ratio. So we're now adjusting this by how long the token had been held. And this is in a very nice constant range, right? We tend to peak out at similar levels. We tend to bottom out at similar levels, and we want to buy when this is high. We want to sell when this is low. So you would have sold at around 10 to 20K at the end of the bull run. We would have sold over here at 60K. And where are the buying signals? They're over here at 3K. They're over here at 15K. and currently we should rather be selling than buying. I'm simply just showing the data, right? No model is perfect, some models are useful, but in general, most indicators of that sort tell us that Bitcoin might be rather heated. Now, of course, there are also arguments why this time might be different because of the Bitcoin ETF and because of the positive regulation, etc. But still, right, there had been a lot of changes during Bitcoin's lifetime as well. And it just shows us that right now a lot of people are in profit and that historically it was a better time to sell now than to buy. Now, currently, I'm still very much invested in Bitcoin, but I do have my stop losses, my very tight stop losses, and I'm already shorting some altcoins. I'm already betting on falling prices of altcoins because the altcoins are currently already suffering. Bitcoin not that much, but the altcoins are definitely going down a lot. Here's the ratio of the coin days destroyed to the realized value transaction indicator. And again, this peaks out at very similar levels, and we should be selling when this is high and we should be buying when we are rather on the lower end. And right now we are at the lower end. What I think is most important during times like this is that we've got a strategy for both directions. Most people just have a strategy for the bull market, right? When things are going up, then the strategy is to buy what's currently hyped, what's currently bought by the influencers, to simply buy where currently the trend is headed. But strategy for the bear market or for the sideways trading ranges, what happens is that people just continue holding those tokens and see them going down just for the hope that they come back up again. If you do not have an approach to make profit when prices are going down, then you're bound to hopium. Then you're probably not neutral. Here is how I fundamentally think about this. When we buy an investment, we obviously want the investment to go up, to perform well. But the issue is that because of that, we also have some kind of selection bias, right? We watch the YouTube channels that confirm our views. We tend to read the news that confirm that things are great. And so we are in this bubble and we are far away from what a neutral perspective would be. And of course, the most objective way to look at the market is long-term, also the most profitable. So what I like to do is I like to consciously look for information that is against my current view. If there's currently information out there that is against what I think should happen, that's what I want to focus on, because this is normally what my mind does not want to see. I mean, just have a look at this. Since the beginning of 2024, so a bit over a year from now, the altcoins as a fraction of all of crypto, so the others' dominance, went down by 36%. There was all of the meme coin trading, there was all of the AI agent trading, even Donald Trump launched his own meme coin, and still the altcoins underperformed everything else in crypto. I've looked at this in other videos on this channel as well. Even in the last year, where Bitcoin went up by roughly 80%, 80 of the 100 top altcoins did worse than Bitcoin. Only 20% of the 100 altcoins did better than Bitcoin. The odds were against us massively, even during a bull run, where you would expect that altcoins do better than Bitcoin, right? When prices go up, altcoins on average should do better, but this is not what we saw in the last year. The returns were very much concentrated in just a few winners. And so that's then how I personally approach this. In the bull market, when everything is going up, it's okay to sometimes bet on a few altcoins, especially if they have some following by influencers, especially if they get pushed by some very important people. But when we are not in a clear bull market, when things tend to go sideways, potentially even down, then I want to be on the side where the odds are in our favor, meaning I want to bet on altcoins doing worse. Most altcoins underperform Bitcoin most of the time. Bitcoin is still the gold standard. And I don't just say this because I'm a Bitcoin maximalist and because this is the Bitcoin strategy channel. I say this because most altcoins benefit the early investors and the team, right? The supply over time tends to expand. Investors get some tokens unlocked that they will then sell over time. And that in the end leads to the price underperformance of many alts. Now, for most people, this is a completely new universe. And that's why I made tutorial videos on this topic, also on risk management, on portfolio diversification, on how to grow wealth long term. It's all part of the premium membership of this channel. It's down below. There's more than 100 videos. TheBitcoinStrategy.com is the link. And so if your crypto portfolio is at least $5,000 worth, then you should be able to make the money back. If it's of course larger, then you should be making profit if you follow the shorting strategies properly. There's also a 1-week money back guarantee. So in case you don't like premium, feel free to just message me within the first 7 days and I'll refund you 100%. there's really zero risk for you. Hope to see you again in the next video here on YouTube. Feel free to also give this video a like. It helps the channel grow. See you on YouTube or see you in Premium. Cheers.